Good evening, folks. This is your ticker guy coming at you from wonderful Niceville, Florida. I want to talk to you this evening about two things. The first is a report out of China about derivatives, and the second is about the stock market in general. Yesterday, we were treated to an article out of China saying that the Chinese government was prepared to repudiate, that is, refused to honor, certain derivatives contracts that were written by out-of-nation, that is, not Chinese banks in China itself. The article seemed to point to derivatives linked to commodities, but I'm not entirely certain that that's where this begins or ends. This is very important because a number of banks, including some big ones in the United States, have been the ones that have been writing those contracts. And, of course, we all know that the derivatives games that have been played in this market over the last 4 or 5 years have been extreme and have been a major contributor to instability. That China's willing to stand up and say, you know what, these things aren't worth the paper they're written on, is a rather interesting twist. I'm wondering if this is just simply going to be, we don't want to pay, or we don't want to be honoring these contracts, or whether there's something a little bit more subtle going on here, more like you never had the money to pay and therefore we're not obligated. I'm not quite sure which is the case, but it did send some tremors through the market yesterday. They came over here into the United States and immediately translated into our banking system. There were also rumors today on the street that there was a large bank that was about to fail. But the details of that rumor were rather interesting. They talked about a bank headquartered in Chicago. The only one I know of that's potentially in trouble is Chorus, but that's not a surprise. Chorus filed a quarterly report declaring a negative tier asset ratio. Well, that's as close to a declaration of bankruptcy as you're going to find. So why that would move the market is beyond me when that news has been in the market for a couple of weeks. And yet it sent the stock market down big when it hit the wires as a rumor. I don't know if there's something else going on here or not, folks, but what I do know is that when the market sells off like that with no apparent reason, there's usually a little fire to go with the smoke. Let's talk about this from a technical perspective. You've heard everybody talk about green shoots. Well, you know what? Hey, fundamentally, where are the green shoots? The ICSC report was out today. It was horrible. Back to school shopping, did it even happen this year? It doesn't look like it, according to the ICSC report. So, if there are no green shoots, then what have we been trading on? Well, that's very simple. Fannie Mae, Freddie Mac, AIG, and Citibank, which comprised in the last couple of weeks, on many days, 40% of the entire volume of the New York Stock Exchange. Today, that massive amount of volume all vanished into thin air. And with it, so did the support for the market. Ladies and gentlemen, 3 of those 4 firms, Fannie, Freddie, and AIG, almost certainly have no stock value in the common stock whatsoever. AIG owes an incredible amount of money to the federal government, as does Fannie and Freddie. None of them has a credible plan to pay that money back. None of them has a credible plan to restore the equity value in their firms. Why are they even listed? Well, because our government doesn't want to pull listings, that's why, and doesn't want to go to the New York Stock Exchange to take them down. New York Stock Exchange doesn't object to this because for every share that's traded, they get a fee. They like that. You, however, see the stock market go up. You don't recognize why, that it's on the back of 4 dead issues, effectively. Let's talk about Citibank for a minute here. What's their off-balance sheet exposure? What are the marks on that off-balance sheet exposure? How well does Citibank do without the $300 billion in asset guarantees? Do they even survive? I don't have any idea. I still can't value a balance sheet. That's why I can't buy any of those stocks. But you know, hey, listen, Citibank goes from $1 to $5, and people get giddy, you get crazy. And then we'll round this out with 2 pink sheet stocks, Washington Mutual and Lehman Brothers. Both bank holding companies formally filed bankruptcy. They got a Q on the end of their stock symbol and are traded on the pink sheets. They've been on a tear for the last week. And over the last couple of days until today, showed enormous gains and huge volumes. Who's buying this trash? Is it a bunch of computers passing shares back and forth between themselves? Is that really all this market has left? Well, I'm not entirely sure, but what I do know is that today, a lot of that volume dried up. And so did the market. Ladies and gentlemen, the fraud, the theft, all of the deception that has gone into this market over the last 2 years, none of it, absolutely none of it has been addressed. None of it has been fixed. Nothing has changed. Yeah, we came off the bottom at 666, and now you got people probably calling you, telling you to go ahead and buy back in. Well, where were they back in March, before the 50% move? Now you want to buy back in? I thought the idea was to buy low and sell high, or short high and cover low. Buy high and sell higher is a viable strategy, but what if you buy high and end up selling low? That wouldn't be so good, would it? No, it would not. We also have coming up the requirement for banks and other institutions to bring back onto their balance sheets all of their off-balance sheet securitizations and trusts. I don't have any clue how big of a problem that's going to be, but I'm willing to bet it's not small. I advise caution here, ladies and gentlemen. We're sitting on a key technical level tonight as I put this up on the web. If it breaks, it is entirely possible that we are going all the way back down to 666, March bottoms, in the S&P 500, and now I would not expect that area to hold, although it might. Nonetheless, if you have large profits, I would be considering measures with which to protect them, rather than allowing them to evaporate if this rally turns into nothing other than a bunch of BS pumped out of Washington, D.C. on the back of more fraud, lies, and deception. And while you're at it, get on the phone to your representative and senator's office. You know that little bill from Ron Paul on auditing the Fed? We need it, and we need it now. I'm your ticker guy, and that's my opinion.